Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. We're going to get started in just a moment. What I'm going to do tonight is walk through the latest technical report at DailyFX.com. So let's go ahead and pull up that report by David Rodriguez. And let me go ahead and read the synopsis about the Eurodollar. The Eurodollar pair has recently made a false breakout above its month-long trend channel, but Fibonacci resistance at 3270 has thus far held back any further advance. The Eurodollar now trades at potentially significant Fibonacci support at the 61.8 of the 123 to 133 rally at 127. A break below that level would confirm the short-term Eurodollar momentum remains to the downside. So let's go ahead and pull up the charts. And the first chart is the Eurodollar. And if you recall in the last report for Friday, I was speaking about that 61.8 level as well. Prices were, I believe, just below that 128 figure. And we can see that the 61.8, it's not very clean, but that 61.8 has indeed acted as at least short-term support. I believe the low, I'm going to change the style of the candlestick so you can see this a little more clearly. Again, this is the 61.8 right here at the 127 figure, and we can see the low of this candle, 126.64. So I would maintain a slight bullish bias against that low, and this is when prices come down and test the Fibonacci level. This is what I like to see. I like to see a slight penetration of that Fibonacci level. Again, that would be this horizontal line right here, and then a secondary test of the Fibonacci level that does not exceed the low of the first test. So that's what we have here, what I would call right now a successful test of that 61.8, which should lead to, at the very least, a brief rally off that level. So moving forward, if you're just listening to me for the first time tonight, what we might do is try to get an entry close to that 127 figure, and then you can place your stop just a few pips beneath that 126.64 low of the test. And if you have a chart at home, you can easily just draw a horizontal line from that 126.64 low and use that as a reference point for your trade. Now the second chart, the dollar yen, as this is the resistance line that I've been using for the past several reports. Again, if you're viewing this on the Daily FX forum, you can just scroll up to see the previous reports, and we could see that the resistance line has indeed acted as resistance over the past few trading sessions. We had a few tests that didn't get close to the line, and the most recent test actually did briefly touch the line, and then we had a little bit of a reversal. But as I mentioned during the last report, and this only makes me a little more confident now in the statement that I'm about to make, is that I believe this resistance line will eventually fail. As the more times the resistance line is tested, the more likely it is to fail, in my experience. So, you know, with every further test of this line, we should have a little less confidence in this line holding. But again, I would still have a slight bearish bias against this resistance line. Furthermore, if you keep the line up, and let's say there is a breakout to the upside, okay, and let me zoom in a little bit and give you a little better view here. Okay, let me go back one. And let's say prices do break out above this resistance line. What we might do is let prices break out and then look to enter on the backside, because usually in the future, once resistance is broken, it will often act as future support. So that might be an opportunity for that to occur as well. So that's something I would keep an eye on into tonight as well as tomorrow. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.